Welcome back everyone to another episode of Trade by Numbers. Thought I'd shoot this video outside today. It's a beautiful day. Birds are singing, animals are playing, and the market's doing okay. Right now we've got the S&P down just a little bit in the pre-market. Last I looked, about 0.17 down in the pre-market. However, we got crypto up, we got a lot of my watch list up, and what else is up? Banks are up. So what does that mean for us moving forward? Well, if you've been following me for any length of time, you know that I've been saying that the whole so-called banking crisis was being blown out of proportion, in my opinion. And then you've got, I know I was watching JP Morgan come out today, and they absolutely blew it out of the water. Citigroup also beat expectations. So I don't know how all of them is going to do, but I do know that we've got a good start on the day. I know JP Morgan's up about 5% on the day already. So pretty big rise right there. Now, what does that mean for the market? I said if the banks had a great time that we'd see the market rally. Now, could we see the inverse of that? And I'm going to make an argument for that because a lot of, I think, what the market has been rallying up on is the fact that the Fed is going to have to pivot at some given time. And I think that they've been hanging their hat on a banking crisis to help force the Fed into pivoting. Now, if the banks are out there and they're doing fantastic, then that may allow the Fed to continue pushing on with these interest rate hikes, continue pushing on doing what they are doing right now, and therefore not pivoting, not going in the direction that the market is anticipating. And that could drive the market lower. So it's really crazy when you think about the fact that it seems like no matter what happens, we keep getting driven back to the narrative that this market could be rallying downward, that we could be about to switch and start moving down in this market. Now, if you've been following me, you know that that is not a surprise for me. With that being said, that does mean an entire change in the direction of the market, which is why I want you to be careful out there. I don't want you to be FOMOing in and get burnt if this market starts to leg down. You know, if the market runs up a little bit more, we actually get above those resistance levels, and then you buy in, you pay a little bit more, but at least we have some confirmation at that point. This kind of no man's land, this is where I just like to be holding some stocks. I love my, UVXY portfolio where I'm just selling covered calls, rolling options over there. That's the kind of market that this does very well in. The whole trading thing, you've got to be very careful in a market like this. Now, it does not mean that we don't get to make some money on the volatility. That's where it helps out to be a day trader, to have a large enough count that you can get in, get out quick, no fuss, no muss. So, what I'm going to be watching for today is just how the market does react to this news. See if we really get a spike up in the market, because that's going to tell me that we're going to get up there. We're close enough to those resistance levels. If we have a big day in the market, we should get right up there to them and start to test those levels. If the market sells off on this news, then I'm going to take that as a sign that the market has been pricing in that the Fed's going to have to pivot very soon, and now they're going to have to reevaluate that. And if that's the case, then this could be the start of that leg down that I've been looking forward to, just because I think that the market has run up way too much for where it is. It's not that I wish anybody to lose money out there. That's why I've been coming on here and telling you what I expect to happen, so that you can follow along and position yourself correctly. Because if you're positioned correctly, the market going down 20% is not going to hurt you, because you've pretty much cashed out of your long positions and you're ready to make money on that move down. That's the way I'm set up. And so I'm looking forward to a move down in the market, because I will make money on that move down, as well as I want to see those lower prices so that I can reaccumulate down at those lower prices on some of the major stocks that I absolutely love holding. So that's what I'm going to be watching for today. That's what I'm going to be doing, and we'll see how it plays out. Make sure and join me this afternoon. We're going to go over our ROI for the week. Of course, you don't want to miss that, because that keeps me honest, lets you know if you should be following me in the first place. How many of these other YouTubers out there actually go over their profit and loss for the week with their community? We go come on here every Friday, tell you what our ROI, which represents how much money we made on how much money we invested. And that's the key number. That's the number that you really need to learn if you're out there trading. It has nothing to do with what the gross is, because that will change as your portfolio gets bigger. Bigger your portfolio gets, the bigger those numbers are going to get, but the ROI number always stays the same. So we're going to talk about that. We're going to see how this whole week ended, and we're going to start getting a plan together for next week. That's what I got for you. Remember, be blessed and never trade with your emotions. Always trade by the numbers.